Hi there. I just wanted to thank you for joining this presentation with Credit Success Academy. My name is Chris DeLeon, and I'm the founder of Credit Success Academy. And I'm very excited to teach you about how you can get your first $50,000 to $150,000 credit lines through your business. And the reason why I'm really passionate about this topic is I'm an entrepreneur myself. I've owned an e-commerce business the last couple of years, and it was because I was able to access these business lines of credit that I was able to scale and grow my business and my e-commerce store. So just a little bit about my background. So in the last recession, I really took a big hit on my credit score. During the last financial recession in 2008, 2009, I lost my job, I lost my income, and therefore I lost my ability to repay back a lot of my credit cards, and I also foreclosed on my property. So that actually tanked my credit score down to the 500s, and I remembered it was a really difficult time, and I really had a hard time looking at my credit score and even my credit report because I had so much frustration and shame in my mind that I didn't really want to talk about credit at all because it was just such a difficult time in my life for the first couple of years following the last recession. And it was only about a couple of years ago when I heard about people who managed to travel around the world for free. And for me, traveling is a very big passion of mine. And I basically researched and I understood what these people were doing with free travel, and they were able to do this because they were able to take advantage of rewards, travel rewards offers from a number of different credit cards. And that's when I decided and I made a decision to fix my credit and to really just stop being ashamed of looking at my credit report and just finding out and investigating the different ways that I can fix my credit and to raise my credit score. And I was able to do so because I was driven by that desire to travel around the world for free, that I was able to pull myself from a credit score of about 500 up until over 800, and a credit score of 800, and was able to qualify for all of the best travel rewards programs. And I was able to get the sign up bonuses and then travel the world for free. So it was a pretty exciting time. And then once I was able to get the travel rewards card, I ended up starting an e-commerce business. And at that time, I didn't really have much in savings to put into this business. So I had to figure out a way on how I can finance my startup costs. And I didn't want to ask friends and family, and I didn't want to talk to investors about potentially investing in my business. But I learned that through my good credit, a lot of banks and lenders said, why not take advantage of your good credit score and learn how to build business credit and get lines of credit that you can use for your business. And because I learned about the power of credit a couple of years ago, that's how I've been able to build up credit lines to about $200,000 or $300,000 over the last couple of years. And that's what I wanted to do here in this presentation, is show you how I was able to build my credit, rebuild my credit, and then leverage that credit to be able to access credit lines that I was able to use to pay for my funding my business, especially my startup costs, such as advertising for new customers, which was really important in order for me to get my business rolling and for the revenues coming in. So that's why I'm really passionate about helping entrepreneurs, whether you're a current entrepreneur and you have a business and you're looking to scale your business, or perhaps you're employed somewhere else and you are looking to start a business, but you're not sure exactly how you're gonna fund it, then I definitely want to present some information and some powerful tools to show you what you can do to leverage the existing credit lines that are out there. So that's what I'm excited to present to you today, on how to get your first 50K to 150K lines of credit that you can use for your business. So basically today I'm gonna cover a couple of things. First of all, I want to present to you a credit roadmap, and it's basically to give you an overview on how you can go about with your own credit journey, and basically how you can go from raising your credit score to creating income and wealth for yourself, which is what the wealthiest people on the planet do, is they're able to leverage credit to create their income and wealth. So I definitely want to present to you an overview and a roadmap on that. And then I want to talk about the credit report and credit score basics, because having a very strong personal credit profile is what's going to allow you to leverage that to access large business lines of credits. But in order to access that, you'll need to have a very good credit score to prove your credit worthiness in the eyes of lenders. And I'm going to just show you a couple of ways on how you can improve your credit score. And then lenders are specifically looking for businesses that follow a certain set of what's called business readiness or lending compliance. And I'll go over that in more detail, exactly what you need to do to properly set up your business so that it looks trustworthy and legitimate in the eyes of your potential lenders. And then I'm going to give you some tips on how to apply for your first business lines of credit, and then what to do afterwards in the next step. So that's what I'm here to do today, present that information to you. So the first thing I wanted to present is give you an idea of a credit roadmap, just so it can give you an idea of what you can do with credit and how powerful it is. Now, I know a lot of mainstream media talks a lot about debt is bad, you shouldn't get credit cards, cut up your credit cards, don't go into debt, which part of it is true. Definitely consumer debt and using credit cards to buy things that you can't afford just so you can impress people that you don't like is not a good thing. But you definitely want to learn about good debt, and what good debt is debt that produces money for you, that produces income, that produces wealth. And that's the credit we're going to talk about here today. So I'm not here to teach you how to raise your credit score and get large lines of credit so that you can go on a frivolous spending spree and rack up more consumer debt. But what I want to do is show you exactly how you can use credit to create income for yourself. And basically with the credit roadmap, it all starts off with improving your credit score to 740. So basically 740 is what lenders start considering excellent credit. And that's where they're gonna start deciding that you're worthy enough for us to lend you larger lines of credit, which would be the next step. And then once you get the credit lines, then you want to use those lines of credit to create income streams. So for example, if you own an e-commerce business, let's say you've tested a number of different products and you found one or two products that you know are winning products and they're profitable because you've properly tested it, then that's the time to scale up your advertising efforts. And having access to lines of credit allows you to scale that so that you can generate more sales and more profits for your business. And then you want to take advantage of racking up the rewards points, because hey, if you worked really hard to show responsible use of credit, now why don't you use it to leverage getting the best rewards points so you can travel the world for free, which is another benefit of having very strong credit. And then you want to get to the point where you're ready to invest the profits that you've made for your business into cash producing assets, or use your credit lines to make an investment in assets like stocks, real estates, or perhaps buying or investing in other businesses so that you can create long-term wealth. So that's definitely something you want to keep in mind as you're going through the credit journey. But in this presentation, I'm just going to go through the first two steps of the credit roadmap, which is how to improve your score to a 740 and above, and how to leverage that good credit so that you can start accessing business lines of credit that are going to lead you to step 3, which is using those credit lines to scale your business if you have already profitable products that are already proven. So that's what we'll cover today in the credit roadmap. So basically, before we even start about talking, what credit is and how important it is, just to give you a basic idea of what credit is, it's basically borrowing money to make a purchase. And in exchange for the financing that you receive from your lender, you agree to repay back that lender that amount that you borrowed plus the interest. And the interest is how the banks are going to be making money from this transaction, because they're lending you that credit. So that's pretty much credit in a nutshell. And here in the US, there are 3 specific types of credit. The first type of credit is what's called revolving. So a revolving credit typically refers to credit cards. And that means that although you rack up a balance on your credit card, the credit card lender or the bank doesn't require you to pay that amount in full by the due date, but they're gonna require a minimum amount that you need to pay for in order to consider your payments on time. And if you pay only the minimum amount but not the full balance, then the banks are going to charge you an interest rate on the balance that you're carrying. And typically credit cards are revolving types of accounts. The second type of credit that's available is what's called a charge card. So they're sort of similar to a credit card. The only difference is that you have to pay the entire balance in full, and you're not able to carry a balance from month to month like you can do with a revolving credit card. So that's something to keep in mind. And a typical charge card issuer is American Express, and you'll often find a lot of American Express charge cards that you could qualify for with good credit. And then the final type of credit that's available is what's called installment, and these are your loans. And basically loans are different from revolving because with loans you have to pay a fixed amount every single month for a set number of months. So for example, types of installment accounts could be your loans like mortgages, your student loans, your auto loans, your personal loans, and also home equity line of credit. So this is what an installment is. So these are the three different types of credit that are going to be showing up that lenders will most likely extend to you, and that will also show up in your credit reports as well. So now that you understand exactly what credit is and what the three types of credit are, the next thing to really understand is what are credit scores. And basically what credit scores are is it's a scoring system that creditors use to decide whether or not they're going to extend you with the credit line, and also how much they will charge you, which is the interest rate. So credit scores basically indicate your credit worthiness in the eyes of the lender, and it's basically looking at your past use of credit, whether or not you were responsible with it, so they can determine through their underwriting process your ability to pay back the loan based on your credit history. And what the scores are going to be based out of is data and information that's pulled from the credit reports that are furnished by the three major credit bureaus in the US, which are Experian, TransUnion, and Equifax. And there are two types of scoring models that you're going to come across whenever you're researching and pulling your own credit scores, and that's the FICO score and the Vantage score. And I won't go into too much detail here in this presentation, but you definitely want to take a look at the differences, because most of the lenders use FICO score, which is developed by the Fair Isaac Corporation, and it ranges from a low of 300 to a high of 850. So FICO scores, with Vantage scores, you'll see Vantage scores also has a similar range, but most lenders don't use the Vantage score system yet. But you typically find your Vantage score when you pull up free reporting sites like Credit Karma and Credit Sesame. But that isn't exactly necessarily going to be the score that the banks or your potential lenders will use. They typically use the score from the FICO system. So as we go forth in this presentation, we're going to be talking about the FICO score and not necessarily the Vantage score, just to clarify it here. So that's what it is in the credit score. So now that you understand the credit score, basically the credit score, through its own algorithm and calculation, determines the score based on the information that's found in a credit report. So what exactly is a credit report? So a credit report in the eyes of a lenders, it functions like a financial report card to the lender, and it's going to contain a number of different information within the credit report. So the first thing it's going to contain is basic information like your name, your date of birth, your social security number, your current address along with your previous addresses where you lived, and if you're married, it'll include your spouse's name and also your spouse's date of birth. And it's going to include credit information, so the types of credit that you have, installment loans, revolving, the amount of credit that you have for each account, which is often known as your credit limit, and then also your payment history, whether you've paid on time or if you've had any late payments or any other type of negative information like you're 30 days late, 60 days, or 90 days late, that information will show up. And your credit report, in addition, is going to contain public record information. So this could be information like the bankruptcies, any judgments, any lawsuits, tax liens. Sometimes it might include child support information. That might not be common anymore nowadays. Your credit report is also going to contain information on any collection attempts that were made. And typically what happens is if you don't make payments with your original creditor, what your creditor will do is they would hire a collection agency to try to collect the debt from you. That when that happens, that collection agency is going to put a mark in your credit report. And the other thing that's going to be in your credit report is what's called an inquiry. So every time that you apply for new credit, a bank or a lender is going to do what's called a hard pull on your credit report, where they'll check all the information on that credit report to decide whether or not to extend you with the line of credit. So when you have what's called a hard inquiry when you're applying for new credit, it's going to impact and lower your credit score. You also have another thing called the soft inquiry, and that type of inquiry doesn't affect your credit score. Soft inquiries typically happen when you check your own credit report, or if the banks decide to just check your credit profile to make sure everything looks fine, no changes have been made, as they're deciding whether to keep your credit card account open. So that's what's called a soft inquiry in that regards. And then now that we talked about credit scores and we talked about what's in the credit report, in this report, slide, I'm just gonna show you how the credit score is broken down, and we're gonna look at the FICO scoring model. So as you see here, the 35% of your FICO score is gonna be based on your payment history. So that's the most important part of your credit score, and it tells whether you've made on-time payments, if you've made late payments, if you have any accounts in collection, any defaults on your debts, or if you have bankruptcies. So if you miss a payment, that could drop your credit score anywhere from like a 550 or 100 or more points, because it has such a huge impact on your credit score. So that's the biggest part of your credit score. And then the second largest component of your credit score is the amounts that you owe. 30%, then that makes up 30% of your credit score. And that's typically what's known as a credit utilization rate, how much of the revolving credit are you using. So for example, let's say you have one credit card and it has a $10,000 limit. And if you're using if you spent $3,000 on that credit card, that shows your utilization of 30%. So what the credit scoring model looks at, it looks at your utilization for each of your individual credit cards, and then it takes the overall credit utilization of all your credit cards. So for example, let's say that you have 2 credit cards and each credit card has a $10,000 limit. Your overall credit limit is $20,000. And then it looks at the balances of each of your credit cards. And let's say that each credit card you have a $2,500 balance. So that brings your total balance across all your credit cards of $5,000, which means that your overall utilization rate is 25%, because $5,000 is 25% of $20,000. So that amount is going to be factored into your credit utilization, which makes up 30% of your credit score. And then the next thing your credit score is going to look at is the length of credit history. So it looks at, basically it tells the lenders how much experience and how much history you have of using credit. And what it does is it takes the average age of all your open credit accounts. So for example, let's say that you have one credit card that's been open for 10 years, and then you have one credit card that you opened about a month ago. The average age of your account, for the average age is going to be 5 years because that's the average of the 2 credit cards that you have. So again, the longer and more history you have, the higher your credit score will be, because it demonstrates to your potential lenders that you have very good experience managing credit for a number of years. So again, that's going to make up 15% of your FICO score. And then another thing that lenders are going to look for, and that's factored into your FICO score, is your mix of credit, which makes up about 10%. So lenders like to see a balance of having revolving credit, which we talked about earlier, which are your credit cards, and then installment accounts, which could be your mortgages, your auto loans, your student loans, personal loans, or home equity line of credits, which we discussed earlier. So having a mix of both revolving and installment and having on-time payments is what the lenders are going to be looking at when deciding whether or not to extend you credit, and that makes up 10% of your credit score. And then the final 10% that the credit score is going to be composed of is your applications for new credit. So again, if you have if you apply for new credit and then the bank pulls your credit report, that's what's called a hard inquiry, and that's when that actually impacts your credit score in those regards. So that makes up 10% of your overall FICO score. So that's just a general breakdown of the major components of your FICO score. So the next step is really understanding what is considered a good credit score, because you have a range from 300 to 850. So this is a chart that I pulled from Experian's website, which just basically gives you the ranges of credit score. And if you're looking in terms of business credit, a lot of the lenders are going to look at a credit score of at least a 670 or 680, which, if you can see here in the score ranges, is considered good in the eyes of lenders. But if you want to qualify for the best rewards credit cards, if you want to qualify for 0% APR credit cards, and if you want to qualify for high credit limits, banks are going to want to look at the 740 and up range. So when you're thinking of applying for business lines of credit, that's definitely a score you want to look and aim for, is that 740 and up, which will definitely increase your approval odds of getting your applications for either business credit cards, business credit lines, or business loans approved. And then definitely you want to look at that 740 score. So basically, we talked about what's in the credit report, what is included in a credit score, and what's considered a great credit score. The next step is to really understand where you are in this moment in terms of your credit. So as I mentioned earlier, that there are 3 major credit bureaus in the US. It's Experian, Equifax, and TransUnion. So the first thing you want to do is you want to get a copy of your free credit report. And by law, you're entitled to 1 free credit report from each of the credit bureaus every 3 months. So in order to get a free copy of your credit report, you can just go to the site annualcreditreport.com, or you can go to one of the sites like smartcredit.com, and you can actually get monitoring with a credit score, because annualcreditreport.com will only give you your credit report, but it's not going to tell you your credit score. So you want to look at sites like smartcredit.com, which provides you with the credit score. And again, you do get a free 7-day trial. So if you decide you don't want to keep it, you can cancel it and not get charged the full amount. But at least you can get an idea of what your credit score is. And then the important thing is you want to look at your credit reports and see if there's any inaccurate information, because if there's any inaccurate information there, that could be hurting your credit score. And according to the Fair Credit Reporting Act, anything that's inaccurate in your credit report has to be removed. And that's something that you're going to hear a lot about the Fair Credit Reporting Act, because if you have any inaccuracies in your report, you will need to dispute them with the credit bureaus and then potentially with your original creditors to make sure that those negative items are removed from that report if they are hurting your credit score. Because if they're not able to verify that information, that it's accurate, it has to be removed from your credit report by law. So what you want to do is when you get a copy of your credit report from each of the three bureaus, you want to familiarize yourself with the following sections in the report, like the cover page, which includes your report date, report number, and the information about the credit bureau. Your personal information, as mentioned earlier, your name, your date of birth, and address. And then you want to look in the account summary section, which is going to summarize information on all types of the accounts that you have, the total balances, the types of loans, such as if it's a revolving or if it's an installment loan. You want to look if it has any inquiries and any other negative information. It also contains a section of public records, which could be your bankruptcies, tax liens, and judgments, and then all of the account details. Sorry, I mentioned that earlier under account summary. Account details gives you more specific information like the credit limits and the specific balances that you have and the payment history, and also requests of credit history, which again are your soft and hard inquiries. So you want to make sure that you familiarize yourself and look at all of the sections in the report, and then you're going to look for anything inaccurate that shouldn't be on the credit report, because you're going to want to dispute that with the credit reporting agencies to have that removed, because it's hurting your score. So again, to re-emphasize, the Fair Credit Reporting Act gives consumers the right to dispute, and you can challenge it, and if the credit bureaus cannot verify it, it has to be removed from your report. Creditors are required by law to have backup documentation, and if there's no documentation, it must be removed, and this documentation is often lost. So for example, like if you have a collection agency reporting a collection on your credit report, a lot of times the original creditor or the original bank sells the debt over to the collection agency to collect from you. Now, if that collection agency doesn't have the documentation with your signature that you agree to the debt, you can actually dispute that with the credit bureaus because it's violating the Fair Credit Reporting Act. And that's one possible way that you can get a negative item removed from your credit report because it's in violation of the Fair Credit Reporting Act. So that's definitely something that you want to keep in mind. And a lot of times the reports contain missing information like the account numbers, the dates, the wrong balances. So you definitely want to check to make sure that's all there, because there are many cases where credit reports would contain balances that are actually a lot higher than the balances on their credit card accounts. And when the wrong high credit card balance is being reported, that's definitely impacting your credit score because it's showing a higher credit utilization, which would lower your credit score. So when you're ready to dispute, a couple of things you want to keep in mind is, are the items on your report questionable? Is the account yours? So sometimes someone else's account might show up on your credit report without you even knowing. That could be hurting your score. So if the account isn't yours, you need to dispute that right away with the credit bureaus. And again, as I mentioned before about the balances not being accurate, you may see a late payment show up on your credit report, but if you never got a notice, either by regular mail or by email or phone call, you can dispute that. Sometimes your credit limits are incorrect, and that could be hurting your score. Date of last activity is incorrect. Sometimes credit reports have dates missing, account numbers not listed correctly, delinquencies that are there over 7 years. So the only exception to this is, one of the exceptions to this is if you have a Chapter 7 bankruptcy that usually stays there for 10 years. And then if you had any unauthorized inquiries, or if you see any banks or lenders on your credit report that you don't recognize that actually did a hard pull on your credit report, you definitely want to challenge that. And then duplicate collection items is something that you want to dispute. And once you have identified what items you want to dispute, then you definitely want to send them a letter. You have the option to do it online, but I know with a lot of credit repair companies I've talked to, they said disputing it by USPS mail gets them better results. And you can do a Google search on credit bureau dispute template to get samples of letters that you can send over to the credit bureaus. that would help you. And then one tip I want to mention is when you're sending these dispute letters to the credit reporting agencies, you want to send them by certified mail and return receipt, because by law, the credit bureaus have to complete the investigation of your dispute by 30 days. If they don't complete it by 30 days, it has to be removed from the credit report. And obviously, if you have a return receipt, they'll know exactly when their 30 days started. So you have that on record. So that's definitely something to keep in mind if you are going to dispute with the credit bureaus on any inaccurate information that's found on your credit report. So now that we've talked about credit reports, reviewing the credit reports, and then disputing any negative information, the next step I want to talk about is how to actually improve your credit and get yourself to the 740 plus credit score range, which would open up a lot of doors for accessing business lines of credit. So again, you want to ensure that all inaccuracies are removed from the credit report, because sometimes you may have negative information there that could be hurting your credit score. And then pay all your creditors on time. That's the biggest component of your credit score. As I mentioned earlier, it makes up 35% of your FICO credit score. So if you have one of the easiest ways to do it is just to set up an auto payment for at least the minimum amount a few days before the bill is actually due. So that way you know that your creditors are going to be paid on time, and you don't have to worry about any late payments. So that's just definitely something you want to do. And then you want to reduce your credit utilization to under 30% of your credit limit across all your credit cards. Now, 30% is usually is a nice benchmark, because that typically gets you a good score. So for example, if you have a credit card with a $10,000 limit, you don't want to use more than $3,000 on that credit card. So you definitely want to keep your utilization under 30%. But for the best credit scores, they typically have a credit utilization of less than 10%. So that's definitely something that you want to aim for, in getting your credit card usage to under 10% of your credit limit. But for now, if that seems like a stretch, aim for that 30% or less mark. That should definitely help improve your credit score. And then if you have any old credit cards that are open, you want to keep them open. You don't want to close them down, because what happens is if you close down an old credit card, it's going to lower the average age of the account. So if you remember from a previous slide, we talked about the average age of your account makes up about 15% of your credit score. So you definitely want to keep those accounts open and just use them every once in a while, so the banks don't shut them down because of inactivity. So definitely keep them open. That's going to help your credit score. And then you want to have at least 3 revolving accounts. So have 3 credit cards in your profile and 1 type of loan on your profile. That typically helps raise, that's typically what the lenders like to see, that you have responsible use of credit and also credit cards, and then also paying back loans on time. And then you want to avoid applying for any new credit cards unless you have less than 3 revolving credit, or if you don't have an installment loan, then that's something that you can definitely do. So those are a couple of general suggestions on how you can improve your credit. So what I did in this slide is I kind of broke down what suggestions I'd like to make depending on where your credit score is, and then how you can rebuild your credit. So if your credit is in the low 600s or below that, or maybe that if you don't have any credit history, there are a couple of things that you can do to get started to raise your credit score. So the first thing that you want to do is apply for a credit builder account with selflender.com. So basically what it is it adds an installment trade line to your credit report. And basically the bank is going to issue you the loan, but it's going to hold it as a certificate of deposit until the loan is paid in full. But basically what you're going to do is make monthly payments. And then when you're making those monthly payments on that loan, the bank is going to be reporting it to all of the major credit bureaus, so that you are adding positive information and on-time payments. That's going to help boost your credit score. And then once you pay off that loan, the bank will actually give you that money once you fully pay it off. So that's a way that you can build it, but definitely check out selflender.com and research the site, read a couple of the reviews just to make sure that everything looks good for you. But that's one way to add credit history. And that's only if you don't have any other type of loan like a mortgage or an auto or a student loan. So if you have already student loans, just continue making on-time payments because that will help your credit score. And then next thing you want to do is get a secured credit card. So basically what a secured credit card is you actually apply for the bank and then you put a deposit as collateral for that credit card, and that deposit is going to equal your credit limit. So what happens is when you get the security card, if you end up defaulting on that credit card, the bank will just pull the deposit that you have and cancel the credit card. So this is one of the things I did several years ago. Is I was banking with Wells Fargo and my credit score was 500 at that time, so I couldn't get any other credit cards. So I ended up getting a $300 secured credit card with Wells Fargo. And then I made sure that my balances were less than 30% of my credit limit of $300. So I made sure that I spent no more than $90 on that credit card at any time. And then I just made sure I paid off all the balances well before the due date. And then another thing is getting added as an authorized user from a friend or family that has a very strong credit profile. Because basically when you get added as an authorized user, and then that primary user, which could be like your husband, your wife, your parents, or a loved one or a trusted family member, then all of their positive credit history on that specific credit card gets transferred over to your credit card, to your credit report, which will boost your score. So getting added as an authorized user is one of the fastest ways to boost your credit score. The only issue that you may come across is if that person defaults on their credit cards or makes a late payment, then that negative information is also going to be transferred over to you, and that would hurt your credit score. So you definitely want to make sure that it's coming from a very trusted person that can help you rebuild your credit by being added as an authorized user. And then obviously, make on-time payments and keeping your credit utilization under 30% at all times. And that will definitely help you increase your score for the next 6 to 12 months. So that would be my recommendation if you're starting off with a very low credit score of in the low 600s or below. And then if you're at that low to mid 600 range, what you want to do is get additional revolving credit. If you're not sure if the bank's going to approve you, all of the major credit card issuers will have a pre-qualifying credit card tool. So if you use that tool, you enter all of your information like your name, your date of birth, social security number, and your address, and then it will recommend a couple of credit cards that they think you would qualify for. Now, when you use a pre-qualified tool, it's not 100% guarantee that you'll get approved, but at least you'll know that you have chances for applying for that. So you definitely want to take advantage of it. And again, if you don't have any installment loans like a mortgage or a student loan, an auto loan, you may consider getting a very small personal loan and just making on-time payments, just so that you're adding an installment history on your account. And then I didn't add it here, but just like with the poor credit, you can also get yourself added as an authorized user for a responsible adult's credit card. So that can definitely help your score. So now that you are now starting the process of raising your credit score, the next thing you want to do is make sure that your business is considered lending compliant. Because what is going to happen is when you apply for business lines of credit and once you start building your business credit profile, lenders want to make sure that all of the right information is there to make sure that your business is legitimate. So the first thing that you want to do is make sure that you're registered either as an LLC or as a corporation, because the banks will extend higher lines of credit than applying as a sole proprietor, because the bank knows that it's lending to a legitimate business that's generating sales and revenue to pay them back. And then you want to use a commercial address. You don't want to use your home address or UPS or PO boxes, but you can use a virtual office as a business address, because lenders don't like to see home-based businesses, or they're very hesitant to lend to a home-based business. So that's why having a commercial address for your business is very important. And then you want to apply for all of your business license. So you want to look if a state and local jurisdictions requires a business license. So you want to make sure that you apply for that. And then you want to check if you are in an industry that requires a license. So for example, if you're in construction, you're going to need a contractor's license. So double check on that and make sure. And then you want to apply for your EIN, employee identification number, with the IRS, and you can do that for free on the IRS website. And then once you get that EIN, you can use it to open your business bank account. And then you want to get a business phone line that's separate from your cell phone, because the lenders may call to verify, and the lenders can actually tell through their own underwriting system whether the phone number is a cell phone. And then you want to establish your company website, and then have a company email with the domain of your website as your email address. You don't want to, when you're applying for credit, you don't want to list a Gmail or a Yahoo or MSN.com email address. You want to use the actual domain in your email address, so that looks like a legitimate business in the eyes of the lenders. And then you want to get listed in the 411 directory, and you can typically do that with either your phone carrier, or you can do a Google search and type 411 listing, and it'll give you a number of different places where you can list in the 411 directory, because lenders will actually call and dial the 411 directory just to check if you're listed, to make sure that you're a legitimate business. So that's something that you want to keep in mind. And then you want to go and get a Dun & Bradstreet, or what's often known as a DUNS number. And Dun & Bradstreet is one of the major business credit reporting agencies that a lot of vendors will be looking up Dun & Bradstreet to see your credit profile before they extend you with a line of credit. So make sure you just sign up for free, because what Dun & Bradstreet will try to do is coerce you into paying for one of the services, but you don't need to pay to get a DUNS number. So definitely you want to do that. And then make sure that the spelling of your company's name, legal name, and addresses are consistent everywhere. So for example, if you abbreviate street to ST, make sure you're using ST everywhere on all your application forms, your Secretary of State, your business license, your bank accounts, and your website. Everything has to be all consistent, because the banks like to see consistency. If they see inconsistent addresses and spellings of your name, that's going to raise a lot of red flags and concerns, and that's something we definitely don't want. So anyway, these are the things that you want to consider to make sure that you're business lending compliant. And then now we'll get to the fun part, which is applying for the lines of credit. So before you apply for lines of credit, you want to decide whether you want a 0% APR credit card or a travel rewards credit card, because that will determine which credit cards you're going to go for. So for example, popular 0% APR cards are Chase Ink Cash, Amex Simply Cash, and US Bank. Strong travel rewards cards are Chase Ink Preferred, Amex Gold Rewards, and the Amex Platinum card. And then again, to have the highest chances of approval, make sure your credit utilization is under 30% across all credit cards. You don't want to have more than one inquiry or application for new credit in the last 6 months. And then you want to have a 740 plus FICO score. So you also want to list yourself as employed and not self-employed, because banks will be more willing to approve and offer a line of credit you're employed, and technically you are employed by your own company, your LLC, or your corporation. So that's not, much of a lie there. And then for your income, you're gonna want to list what you expect to make in the next 12 months. And one credit hack I want to leave here is, check out credit boards, creditboards.com. I'll leave the link below the video that you can check out to see which credit bureau the bank is going to pull from. So for example, Chase likes to pull from Equifax, and Amex likes to pull from Experian. Again, this is not 100% information. This is just based on data points from other consumers. But when you apply for Chase and Amex, they might not see that you're applying for the other credit card. So that might actually boost your chances for getting approval, because if you try to apply for too much credit in a very short window of time, the banks may not approve you. But yeah, definitely, these are the steps that you want to follow. I know when I applied for my first lines of credit, I had a couple of credit cards from different banks that approved me for lines of credit at $20,000 or more at 0% APR because I had excellent credit at that time, even though I was a startup. So definitely, this is a process I recommend, and how you can get your first $50,000 to $250,000 business lines of credit. Because credit is powerful. If you raise your credit scores, if you show the banks that you're a responsible borrower, then they'll definitely see your credit worthiness and extend you the lines of credit that you can use to grow your business, scale your business, or maybe use it as an investment tool. That's important. That would create income and wealth for yourself. So definitely the next step is if you want any more tips and any resources about credit scores, business credit, travel hacking, and creating income streams with credit, join our free Facebook group, which is credittowealthmastery.com. Again, my name is Chris De Leon. I'm the founder of Credit Success Academy. I do hope that you found the information in this presentation useful. So go out there, start raising your credit scores, and go after the lines of credit. Thank you very much, and just feel free to message me at any time if you have any questions or if there's anything that can help. Thank you very much.